Welcome back, traders and investors. We have Nic Chahine creating income with option spread. Nick, how you doing on this Tuesday morning?
I'm doing fine. Thank you very much. I'm listening to your show. Some pretty interesting names you're coming up with there.
I know. These guys in the chat room are great, and then Brentster there, he always comes up with some good ones. But Nick, I got a question for you. And
Yep.
on Friday, we had the jobs number, and we were getting the pop, and everyone was all giddy and everything. And I think you were referring to the cash, and you said major overhead resistance at 1900. Now, were you picking that out as just like going with the whole number theory? Did you have something in your charts that indicated that was going to be? I don't think we quite got there, but where did you come up with that number?
First, I needed to change my underwear about 3 times that morning because I was short it. For Friday for a day trade, the number I came up with was the number all week long from the open interest with the option. So the option world did not, had heavy interest at the 1900. So it looked like a wall to me. And I always go with the assumptions that the market makers want to hurt as many option holders as possible, and that drives some of my short-term trading. And
Okay.
that was exactly what I was looking at for the SPX.
Okay, so you were just saying that the people that were long the 1900 calls, they're gonna put pain to them because there's obviously people short the 1900 calls and the puts as well. So you just saw open interest in the 1900 calls, and you just thought that it was
Yeah.
too good for the market. Okay, all right.
So when
Yeah.
you see Nick, when you see that huge open interest, do you sometimes like then that's kind of like a block? That's what's going to block the price from going higher. So do you right behind that, like knowing you're
Yes.
probably kind of
Yes.
safe? Okay, can you just explain that specifically?
Yeah, I use it as a sandbag. Like if you've ever been in a war zone or seen it on TV, everybody hides behind sandbags and sometimes more than one. So if ever I want to sell a spread or even a naked something, if somebody sells naked puts and calls,
Yeah.
I usually pick a spread or strike where I'm gonna create risk by selling. The short strike, I pick it where there's some high open interest strikes ahead of it, closer to the money. So this way, it acts like a resistance line.
Right. Yeah, because that open interest is so many participants that if the stock gets above there, they're in the money and they would be selling the stock, to hedge their positions out if you were actually have, the options. So that can actually lead to the price actually going or at least staying below that price. So what you're saying is that sandbag, you're pretty safe to right behind it.
Well, safer than in front of it, that's for sure.
That's for sure too. So
And sometimes it acts as a magnet. It depends on the whole. It's not a clear cut, A, B, that means C is coming next. Sometimes it depends on the spirit of the market. And when we're in the free fall, it does the resistance it doesn't apply anymore because open interest will go out the window because then some other stuff is at play. Like on Friday it was if somebody was saying, oh, I see a lot of open interest in the put, so that's going to be support. Not necessarily, not likely, I should say.
well, sometimes the volume can just overpower it too. Like when you get, everybody's selling off, there's so much more volume that'll just take out any, buddy that's going to play it from the options perspective there. So the fundamental players just simply outnumber, the option players in that case and can blow right through levels.
Yeah,
Sa-
and by the way, on Friday, I would have been happy to be wrong and take a loss on that little short I had for Friday morning, than to have the market take the punch it took on Friday.
Yeah, I've been called a sandbagger too out on the golf course. I try and get. Oh, I don't play very much. I'm about a 28 handicap, and then I go out there and shoot like an 82, and people get all mad at me. But that's a familiar term. But I mean, you're looking at the cash index here, and coming into support here. I mean, on the cash, it looks like you got a lot better chart here at the 1840 level. So is this enough of a pullback for you to to reload the boat and sell some puts and buy some overhead call spreads and put some
It,
butterflies and strangles and with all that fancy stuff you do, or are you a little more cautious down here?
are you looking at my cheat sheet here? Oh yeah. Well, here what I wrote an article over the weekend, and I think it still holds true. I have a few rabbits that tell me at least that guide my trading for the next few days. I'm being conservative, first of all. I think that the sell-off has nothing to do with, not as much to do with the fact that Yellen said 6 months or the taper or the tighten. It's a combination of a whole bunch of things, but I think mostly we still have that pair trade I may have mentioned last week. The yen rallies, the 10-year falls, and the TLT rises takes down the market. So it's an inverse trade where you have on one side you've got the yen and the TLT, for example, and on the other side we have the markets and the 10-year. Tick for tick, inversely related, if you look at. Now, having said that, this morning, the yen, the Bank of Japan decided to keep the rates unchanged, and then the spike in the yen came, but I didn't see a commensurate drop in the futures in the morning. So that's green shoots right there. If we can just break that major trade that's going on with the trillions of dollars that are at play in the yen carry trade, and we thought that we're going to ease rates, so that's going to weaken the yen. That didn't happen, so now the yen is strong. So maybe that'll be the catalyst to sever that relationship, and so we can trade on fundamentals. So having said that, to answer your question, fundamentally, I'm very comfortable with these levels, fundamentally. There are other things at play that I keep an eye on now. I told you last time that the Ukraine situation is not over, and now it's creeping back into the news, but not a problem yet. I also talked about catching knives, and you jokingly said doing calendars and all of that. That totally makes sense right now. For example, you mentioned Netflix earlier. I think Netflix started what the market did in the last few days, but it started early, and it had a sell chug. We talked about it last time, I believe. It sell, a whole bunch of days in a row, and now it's at a compelling level. Yesterday, it based somewhat on a bad day. So I would be comfortable buying longer dated calls and putting them to work in the short term to lower my entry point, instead of selling, try to catch a knife by creating risk below that.
Could you just walk through that scenario here? Because I do see here. I mean, we talk about gaps being filled, and boy, oh boy, oh boy, it
They
had.
filled it.
Yep, it filled it yesterday. I mean, if you were waiting a long time from the earnings for that gap fill to play, it did happen yesterday. So just could you just walk us through a possible scenario for in that trade for you here?
Sure. Next time I'll figure out a way to send you charts, and I'll just draw my point on there. But for example, if I'm bullish Netflix from here, having it had that big mountain, and now it's basing at a level from which it defended last time, 320 something. But if I wanted to go long it without creating a lot of risk, at least I want to define my risk. I can buy a longer dated call, say later in the year or even next year. I haven't looked at how far out they go for Netflix, but let's assume that there's a January 15. I'll buy a call, and I can sell against that call equal number of contracts in shorter term as long as they're at least at it or higher.
Mm-hmm.
So it does not require extra margin. And if I can expire those calls worthless, then that premium I collect for selling those nearer dated calls lower my entry point. In other words, it makes my break even a little bit lower, so I can have a little more conviction in my stance with the calls.
And where's your risk? Like where is your primary risk? I mean, obviously where you're putting the trades on, but it's not like you're going open ended on the risk on something like this.
No, I define my risk by how comfortable am I to pay for that call,
Okay.
and I can even make it a call spread, and but the call makes it nice and simple. And if you have enough conviction in the stock that you believe has some quality, then your bottom end is not zero, really. It's maybe another 2, 3, 4%. And if you can sell calls to make them work, you can have enough conviction to risk it. Say, okay, I can eat another 5% drop in Netflix, for example, because I'm selling calls, and if that still continues, then you get out for a small loss, and then you say, okay, I'm wrong. Now, having said that, for Netflix, you guys mentioned Nike. If you can superimpose the two charts, they both behave exactly the same. So you said you were cautioning about Nike dropping. I don't follow Nike, but from the chart, it's it let up a lot of its happy times, so now it might be a decent value. All of this that I'm saying here is on the basis of that we don't have something more nefarious to coming, which I don't believe we do. We need a new shoe to drop in order for us to fundamentally lose these levels, fundamentally go a lot lower. People are saying, well, let's have a correction, let's have a correction. We just did, only it was
Right.
concentrated. It was concentrated in the stuff that was high flying, the momos. Those were easiest to beat.
Right.
So, Friday they were free fall, right? Everything
Yeah.
2.5% on the Nasdaq. That was just insane. And they weren't just throwing all the momos out. They were throwing the momos and a few other stocks like Google. Do you think it
Yeah.
deserved the beating it took in the last few days? I don't believe so. So Google would be another one I would buy calls in. And the third important rabbit that I have, which is it's going to sound pretty stupid, but it's Apple. And I'll tell you why. Because Apple, last time it got down to 5.5, 505-ish area, it got defended really hard by the markets, including the company itself. Even out in the open market, they went out and bought their own stock. So if I believe that Apple's bottom is 505, it will be it will provide heck of support for the whole market, including the Nasdaq. What is it? 12, 13, 14% of the Nasdaq?
Right. Just going back to this whole Goog out thing. I know you were waiting for things to shake out here, since with the split here, and the regular Goog. I mean, the charts are kind of hard here. They tell a story of it coming down over the 600 level to 530, and then the Goog L. I mean, have you put that together? Which one are you going to be trading the options on?
I keep hearing people want to pile in the primary one, the one that has voting rights. I'd want to follow the money. I mean, don't the all the funds are a lot of major funds cannot buy anything unless it pays dividends, and I really don't know. It's a little. On the first day, they diverted quite a bit, but then they came back together. And yesterday, I was trying to watch them side by side, and they were behaving in the same manner, although $1 or $2 apart. So I think that's still unclear. I can't make that call yet. Instinctively, I want to say they want to pile into the dividends.
So
Who
which
cares
one?
about who cares about the voting unless you're an activist, and
So
that's not
which
most of
one?
the
So
people.
which one would you be watching?
I'd be watching the Goog.
The
So
Goog.
to
Okay.
yeah, because the Goog L, I believe, is the one that has the voting powers. The new.
And those two stocks are going to track each other. I mean, you got the VIA A, the VIA B. Like those two stocks will track each other. It's just a matter of which one's going to have the majority of the volume at the end of the day because both have been trading still pretty heavily. But I mean,
Yeah,
either way, they're going to be the same chart.
I think they're both a bargain. That's what I
Thank
think. I
you.
mean, the company prints money. It has earnings. It's not
Yeah.
something that is out there that people are taking a chance on because it doesn't have any earnings. I mean, it's a healthy company.
Okay. Also, a few weeks ago when you were on the show, we talked about Goldman Sachs here, and it was something that was back when it was at the 160 level, and it did have its run up to 174. You were a little worried about under the 160 level. You really didn't have an out here. Now we're back down under this 160 level. You still tempted to that because I mean the charts look so bad here, breaking under 160. It almost makes you want to go out and buy the stock.
Look at those two candles. That's insane. Two huge back-to-back red candle. Actually, three, but two massive
Yep.
candles.
Yep.
And the second one is on heavy volumes. Anytime I have candles that size, I need to respect them. Although this is about, I saw three falling peaks a couple of days ago, and I don't know if it's technically a three falling peaks. If I have a technical analyst online here with us, he might argue or she might argue with me, but the spirit of it there is there. And one was on March 7th. The other one was about the 20th, and the third one area was about 4/3, April 3rd. So that usually doesn't end well, especially in a market environment where the whole market is shaky. So the target for that I had, hand drawn on there, and it's still on my chart, was 157.50 ish. But it's not an exact science, so it's very compelling down here. I just worry about any bank news that's going to come out this week. Although probably yesterday was a little bit favorable. But if I was taking a shot, that would be another one I would stab into some calls, like we just talked about.
And that's my question too. Actually, I was wondering that on the show just when we first started. You saw all these banks here trading down, but then they came out yesterday, gave them 2-year extension on the Volcker rule. Isn't that good news for these banks? Like, wouldn't you think they'd rally on this?
Sounds like good news, right?
It sounds like good news, but they're not really rallying. They are a
no.
little bit from where they were. They were down this morning, and
Yeah.
some of them have went
Well,
green now here. So
well, here's another thing I want to talk about that wraps into this conversation perfectly. Okay, so the first things to take a beating severely were the momos, and because they were the ones leading us up. So the market said, the bears said that it's easy to beat up on these guys. Let's go after them. They did that relentlessly, and they've all been humbled, every one of them. So now they're taken out down to levels to where they're cut, 10%, 15% probably from their highs. And then now we're seeing like yesterday's price action not be so concentrated in the momos. And in fact, some of the momos pain was spread, and some of them were actually green, and some of them bounced, like Priceline. Priceline found a good bottom yesterday. My gosh, from 1130 something and closed in the 70s or close to it. And then Kramer on his show blessed it, so it's probably going to carry some momentum this morning. So anyway, so the momentums are somewhat basing, and so I ask myself, are we rounding into a nice bottom without a new shoe falling so we can start to creep back up? We're not going to slingshot up, but we're not going to slingshot down either. So is this rounding or spreading the hurt into other stocks like the IBMs and not the IBMs, bad example, like the Goldman Sachs and other stocks and mainstream stocks, that the rotation that everybody's talking about. I have an index. If I start seeing people on CNBC that I don't know talking about the rotation trade or this trade or whatever trend the markets have been talking about, that's probably the end of it.
Well, I tell you, CNBC, yeah, exactly that. It usually seems like I even play from the news perspective. The news will break, and then about 3-4 minutes later, especially in after hours, CNBC will break the news. So it'll get an initial lift maybe off the news and then start to fade down, and maybe they're fading the news. Then you'll get another pop off the CNBC breaking the news, and you can actually, a great way to fade it. So I'm a big fan of the fade CNBC trade as well there, Nick.
Yeah, definitely. And you got to see who it is. If you see front runners, big names out there, then, the story might be early enough in the early stage. But then you see people you don't recognize, and no disrespect for these people, just that they don't have notoriety, so they don't come on the show first. They literally come last. So the story has been stale. So it's really not a stupid way to look at things.
Well, just on that topic, like Friday, I think they were saying, "Oh, this rotation." You're right. They're all talking about rotating out of the momentum stocks and into value stocks. That happened 2 weeks ago. That was 2 weeks ago.
Yeah.
Like a little late to the party on that one. We were talking on the show about Berkshire Hathaway 2 weeks ago here on Pre-Market Prep, saying, "Hey, that Berkshire run is indicating that these value stocks are coming back into favor." That wasn't even 2 weeks ago. That was a month ago. So when Berkshire went on the whole run, so I mean, it was a month ago, and here they're talking about. So you're exactly right. And what do we see yesterday? The momentum starting to slow down and starting to actually come back into favor a little bit here too. So great indicator, Nick.
Yeah. So the Tesla, for example, to carry what you said, Tesla was what 226 was up in the 250s, 60s area, and it's been chugging down since then. So it's not a news story. Yeah, you're right. So yeah, you got to look at all the news and see how you can use it. And with the advent of Twitter, who needs the news? We really don't. It's more for entertainment because we get it way before they air it. Somebody tweets it and bam, it's all over the place.
Exactly.
Benzinga pros all over it
Yeah,
too.
exactly. All right, we've had Nic Chahine on creating income with option spreads. Not afraid of the sell-off here over the last couple days, Nick. So we'll see what happens. See if we can bounce off this area. Definitely support here in the pre-market, that 1833, 1834 level. So, Nick, send us some of your charts. We'll see if we can get them up there next time. It'd be great to give our viewers some graphics of what you're talking about. Always giving us great insight to the market. We'll talk to you next week, Nick. Thank you.
Awesome, guys. Thank you.